March really has been quite a month for the mutual fund sector because finally we have an understanding that a bit of a shift, I call it a shift and not a reset, a shift which the mutual fund industry, which the regulator itself have been batting for, that seems to be happening. That is, funds are coming in, but now after 11 months, they're coming into the large cap space. But first, the main number, the number for the month of March, the net equity number itself is lower than February by about 4,000 crores. So the number stands at 22,691. This because of the shift that I'm talking about, as well as the fact that the NFO party, that has tapered down a little bit, and I'll come back to that in just a second. Let's talk about this change between mid-cap, small-cap and large-cap. For the first time in this entire fiscal year of FY24, small-cap funds have seen slight outflows, just about 93 crores, which is actually paling in comparison to the total inflow of 40,000 crores that small cap funds as a category has received. But there is an outflow, and the money seems to be moving away from mid caps and small caps into large caps. The large cap category has drawn in 2,128 crores. That's the highest inflow in large caps that we have seen in FY24. Even in mid caps, the numbers have come down from 1,800 odd crores to about 1,000 crores. Let's move on. The other picture is very solid, and that's intact, and that's the SIP picture. Second month running, SIP inflows have crossed the 19,000 crore mark, 19,271 crores to be precise, slightly higher than what we saw in the month of February. NFOs, new fund offerings. Well, in terms of open-ended funds across equity, hybrid and debt, 19 offerings came in March and they pulled in close to about 3,800 crores, which is a far cry from the 11,400 odd crores that this category, the NFO category, was drawing in because there were some very big high decibel launches in February, which were missing in the month of March. Talking about some of the other trends, it's the end of the year. So what is usually the case happened once again in FY24. That is the ELSS category, the tax saving funds category. That's pulled in close to 1,800 odd crores, much higher than February. And also the ETF category has pulled in over 10,500 crores. That's because typically a lot of the investments that are coming in from the EPFO, the Employee Provident Fund Organization, they typically happen in later. So that bulk of that money goes into ETFs, and that perhaps pushed up the ETF number to 10,500 crores positive. Overall speaking, I mean, mutual funds, the total assets under management are still very, very solid at over 54 lakh crore rupees, just about 53.5 to 54 lakh crore rupees. That picture hasn't changed, but the reset is happening. The question is this just because of the stress test that happened, because of the market correction that happened, and all this talk of froth and bubble, or whether this is a new trend, whether from here on investors will perhaps go back to choosing large caps over mid caps and small caps? Well, the answers will unravel themselves in FY25.